morning. Okay, I gotta monetize this mofo. Content live. I don't know why it doesn't allow me to do that. And I probably should be doing this with a countdown or something. But let me turn on the do not disturb. Okay, and we're going to go there. We're going to go over here. Get that out of the way. We'll go to our default browser. I'm going to do top chat. Okay. We'll turn on YouTube here. Morning, Joe. And I am going to your channel. 12 furrow. Okay. Hit that thumbs up button. I should hit the thumbs up button down at the bottom. But oh well. I got my notes here. I got a lot of freaking. I don't have that much to go over. And let me go over to Seeking Alpha and see some of the top movers. Bank of America, top 10 trades. Long blended 30-year treasuries, long zero coupons, long IG tech bonds. Boy, I hate. By most in the unloved sectors, regional banks, utilities. Oh, hey, Timothy. Welcome. First timer, virgin. Hope you don't bleed. Breaking your hymen here. Hi, man. I always thought that word was funny. I don't agree with this. What's ACWX? That's iShares. That's emerging markets. I don't agree with that. I do agree with this. Bears refuse to acknowledge new all-time highs in 2024. I do agree with that. So, wow. That's kind of big. I mean, I get Max for free. I do pay $15 a month for Netflix, but I pay $25 a month for my actual phone service through Verizon. So I'm saving like $50 off of a normal Verizon bill through Visible. Let me get Linktree up. Linktree/daily stock pick. Because the Visible I get here, you join Visible and get $20 off the first month. You can get 25 or 35, either one. But I'm on the 25. So this is kind of big news, but not huge news for me. I won't include it. Let's see. And Timothy, since it's your first time, I typically just go over. This is the freeform version where I don't use my notes or anything. And if you want me to look up something. Nuke names jump as 22 countries commit to triple nuclear energy capacity. Oh. Yeah, this is a good article for me to include because nuke names, I mean, nuclear energy names are probably pretty good. Let me put that in. Where's my Uber note? There it is. Okay. Let's see. Nuke names jump. We're going to put that in. I do have to look up the Alaska Airlines. Let me look up Alaska Airlines. Alaska Air Group. And let's look up the news because they are buying for $18 a share. Morning, John. Is this a good article to put in? Losers. Alaska Air Group. No. I'm going to find the actual Alaska Air Group. There it is. We're going to put this in because it's $18 a share that they're going to buy Hawaiian Airlines for. And Hawaiian Airlines, let's put in ALK, HA. I'll look at BOTC. Let me get rid of this stuff. I was going to tell everybody, follow me on Twitter, because I'm using Twitter more and more, but I understand the political drama around Elon. I don't particularly care about the political drama around Elon. I'm not on one side or the other. I don't think the guy's a bad guy, but I've been called anti-Semitic for that. So saying that if I'm anti-Semitic and the Jews are meeting with him, yeah. Yes, it did. Yeah. But I will tell you, and this is what's interesting. So Sedge in pre-market is up 1%. It's at 83. I think this is around where I sold it. I may have sold it right before this drop. I think I sold it around 90 or something, if I remember correctly, and I could be wrong. It's just, you put that kind of stuff out. You know where? We'll go over to Savvy Trader. Where did I sell it? We'll go to Savvy Trader and look. Because it should have me here. And we'll go history. Sold it 81.63, so it's up above where I sold it, and it has been going up, but I'm just so done with it. When a CEO and an announce pre-earnings and say we have no demand, I mean, higher for longer is hard, but let's look at BOTC. But they did get taken out. It's just ironic. This is the Global Robotics and Artificial Intelligence. I think if there wasn't artificial, this one I don't know if I looked at this one. So you've gone from 22 at the end of October, which was just, you should have bought anything at the end of October, to 27. What are you up? No, I don't want that. Why did I click on that? I don't even know how to get that one. What the hell? Remove all annotations. What the hell happened there? I thought I clicked on this. Yeah, I guess I did click on that, but it didn't do anything. Okay, we're going to stroke move that down. We don't want that one that high. It's an 18% gain, so you're almost up 20%. Timothy, great trade if you're in. Oh, you've been looking to get in. Okay. Then if you're looking to get in, I wouldn't get into this one right now. If you're going to go in for a long term, get into it. And we'll take a look at what makes this up. Because when you go to the weekly, you're just getting to the 200-day. Expect some resistance up there around 27.50 where the 200-day is. But that 50 days moving positive, and your 9 and your 21 are starting to move positive. Your 9's just crossing up on your 21. Your Bollinger Bands are a little wide. So I'd be a little bit scared in that they're cinching up, which could indicate a move down. With that move up, you're likely to move down. Your RSI is at 57. It's kind of in no man's land. But the other good news is that you're having a MACD cross up right there. So I don't think it's a crazy one. I'd like to look at this one in Seeking Alpha because I can look up the holdings of bots. So bots over 1 year, you're up 24%. Robo versus bots, a comparison of the two AI ETFs. But let's look at the holdings. NVIDIA, Intuitive Surgical, ABB, Keyence. I don't know a lot of these things. So it does have a lot of stocks I don't know. It's got a total number of 47. And you can see technology is 47%, industrials, healthcare. But I would read this article. Let me send you this in the link. I'd look at that one. Larry. Yeah, I'm better. I'm not 100%, but I'm better. I still don't have a lot of energy for some reason, but I didn't have COVID. Is issued by ETF managers, an exchange traded fund designed to provide instruments, exchange designed to provide. They're both. Robo ETF, they're. Yeah. Let's look at Robo versus bots. Let's look at the performance. Oh, the other thing I want to look at is expensive on bots. It's expensive. 0.69. That's pretty freaking expensive. Tight bid versus ask, so no big thing there. Bots versus, we're going to select metrics, and we're going to say total return. And select symbol. What was that one? Robo. I think it was Robo versus bots, yeah. Update. 3-year Robo is down 6%. Bots is down 16%. 1 year, bots is up 24%. Robo is up 7%. The most we're going to be able to do is 5-year, just on the performance, because they. Honestly, I don't know which one I would pick, but my take on this, if you're in for the long term, just buy it. I mean, AI is not going anywhere. We're still on that train. I just can't imagine. Enphase broke above. Yeah, Enphase is morning, Nevin. Enphase has been going on a run. I mean, solar has been going on a run, and that's all because higher for longer. They're going to reduce rates. I mean, that's what the entire market is thinking, is that they're going to reduce rates. But yeah, if you got in at the end of November at 81, you're up, what, 20%? Let's see. If you got in at 81, you dipped down. But yeah, 31% you're up. So, yeah. Morning, Chris. Yeah, I got an email. I got a social request for our favorite DPST. And I mean, look at this is crazy. I mean, if you just bought this at the end of October before this run, you had a chance. Let me get rid of this, okay? I'm going to remove this segment, okay? Because I'm going to keep that in there because I think that one's from a weekly. If we go to a weekly, it's from a weekly where we touch 3 points, and I said you're on the bottom side of this. And at some point, we try and get to the top, but your 50 days still moving negative, and you're just kind of putting in this. If we go to the 4-hour, and we look at the 4-hour on this, it's a decaying asset, so you really don't want to hold it. But if you got in here and you said, oh shit, I want to get out, okay? Just say you got out there. Let me see the property. No, I don't want the properties on Bollinger Bands. I want the properties on this. Because I want to bring it down. Yeah, I want to bring it down. I don't want the large stroke on that one. So you got a 31% gain on there. And then once it started to take you know, the algorithm didn't get you out, still had you in. But if you brought this one back, now you're at almost a 50% gain. If you just said, hey, I'm going to buy, you know, before it jumps or even after it jumps. Let's remove this. And we'll just say, you know what? After the gap, you bought it. You're up another 30%. I mean, this is how the TrendSpider, I would say, or these triple levered ETFs. Remember, is TrendSpider still offering an offer? Let's see. I don't even know. They had such a great Black Friday offer. A lot of you took advantage of it. But I don't think a lot of you, yeah, let's see, view plans and pricing. It's still $397 for the year. So, I mean, let me make sure. Let's see if I use mine. It's supposed to be the best offer available if you use my link there. And it is. Yeah, it is. So they've linked me as an affiliate to the best offer. So if it's more than 25%, that's why I don't put 25% anymore. They've guaranteed me that when they don't have a sale, you'll get 25% off. But they're doing best offers now with my link. So yeah, if I mean, just using these charts, you can clearly see. I think the best combo, if it were me and I wanted to get into technical trading, I'd probably look at getting that and my paid. And I'm going to do the paid one. Paid one's going up to $100. I may even do it 120. I'm not sure yet, but I think if we go into a bull market, I think a lot of my strategies and stuff like that. I mean, the paid, I think, starts Jim Cramer. Paid starts right here. And is Jim Cramer right? I mean, this is just a great look at the market in my mind and what I'm doing with the market. So I included a couple of stocks here, but for anybody that paid, you got it, you know, kudos. But I think between that and TrendSpider, and I may offer, you know, sit with me for an hour, and I'll answer anything that you want for TrendSpider if you sign up. I don't know if it's, you know, maybe 20 minutes. My attention span is not an hour. But I might do that. Okay. So hopefully that answers your question, John, about DPST. And Bill Gross, I mean, Bill Gross has been saying buy regionals, I think, for 2 weeks. I mean, that was way back here on like November 28th. I remember. Let me see. Let's see if Bill Gross, articles about Bill Gross. Let's see. Oh boy, that's an old picture of Bill Gross. I don't see. Let's see. Gross by. Yeah. Yesterday, I mean, he said this. This is this dude, Rita Mora. Bill Gross, if you just go to Google, Bill Gross by regional banks, and we go to, oh, why are you asking me that every friggin' time? News. Yeah, 1 month ago. So I think this is more of an analysis than anything. No, I don't want Rita to follow him. Yeah, TrendSpider is amazing. I mean, TrendSpider, and and how do I say this without coming off as a total freaking like Homer geek? But I love what you did, Larry. I mean, I'll just sit there in front of the TV watching football on Sunday and just look at charts. And I'll scan charts. I'll scan different things. In fact, there's one new indicator that TrendSpider has that I was playing with this weekend. The new indicator alert, per session volume by price. And it's pretty amazing. Point of control line, value area. I mean, it's pretty cool what you can do with this thing. You have to log in and import it. Per session volume price. It's a good thing. So I was playing with it a little bit. I'm still not very good at it. I should say that. I'm not very good at that stuff. But okay, let me see. Let me bring up the cues. Do I want any of this? No. Remove all. We're going to remove all that stuff because I think that was for the paid subs. We're down. We're down a good 1%. Okay. I am going to do. The core portfolio is hit hard. Meta down at 319. Remember when Meta was at 340? And I said, just hold off. And yeah, I'm going to do a pretty quick one today too. Because I think, it's just the end of, let me see. What I have to do is new overlay big head. That's what I'm going to do. And we're going to go to my notes. And I'll pull this up and we'll just do, instead of Active Trader Pro, we're going to do preview. There we go. And we're going to pull this down here. And then we're going to say, no, that doesn't pull up. Let's see. I pulled up a couple of things. I'm going to pull that up. Why not? We're going to do that. If I switch back over. There we go. Yeah, I like that new indicator. I don't know. I was playing with it a little bit, but I think I messed it up. I've got to read that article again. I got more into, let me find some, you know what I do have to do before I start is my scans. I'm going to move this up here. Okay. Gonna move that up there. I got a lot to go over. Let's do some scans. Scans for some stocks. That's why I got more into, hey, let's look at, let me find some small caps. Let me find some stuff that I'm not going to put in here. There were two things I did this weekend, and it was finding out of the name stocks that were beaten down. And then the second one that I did was look at ETFs, because I want to put out a list of top ETFs. And I was using Seeking Alpha for that. And they've got a fantastic ETF screener over here. And so I was looking at that for a large part of the weekend when I was doing stock stuff. Morgan Stanley, Roblox, Goldman Sachs, covered call ETFs. I don't care too much about this, but I'm going to leave those out. Boyle, Halliburton, SCO. How did SCO get a cross up again? I mean, oil just keeps going down. Halliburton, I mean, under the 200-day, it's just one of those. It's one of those crazy things. I'll look at DPST, by the way, Mo. Mo, you just, I think you messaged me about DPST. Morris, yeah. I got it in there on my social requests to go over. So I'll go over the same. If you didn't join, I just looked at it a little bit, but we'll go over it again. VO, VQT, Spider set. Ooh, look at that. XLF, XLP, XLU, XLI. I think most of these, like XLF, that's just another confirmation that we're in a bull. XLP, we're just getting to the 200-day on XLP. This is consumer staples. XLU, you've been in an upturn and you crossed the 200-day. XLI, yeah, I mean, that's just another, this is industrials. They've been on a freaking tear. So, I mean, you're in a pretty renowned bull market. Home Depot at a cross. JP Morgan, IONQ. Starwood, Sandile, Tanger, just continuing to kill it. God, Tanger's such a good stock. Sherry's Fubo, continuing to kill it. Absolutely kill it. Ring Central, a bankrupt stock from what I know, but AI is still hanging on to 30. FedEx, even though Amazon's going to take their business. Carnival Cruise Lines coming off those lows at 11 up to 15. Goldman Sachs. Okay, let's look at the Dow. I mean, we're in a pretty good, solid WBA. I'm not doing that one. I'm not including that. Home Depot. We'll put Home Depot in. And reluctantly, JP Morgan. I'm just not a fan. I mean, they helped Epstein. NASDAQ. The Atlanta Braves. Charter. I'm not going to put you into Charter because I just don't think they're solid. ADP, I'm not a huge fan of. Airbnb. I mean, Airbnb, I just think that day is gone, but pandemic love for that one is still around. CSX. God, CSX. Look at that move. A fucking Old Dominion, just at its 200-day at 405 when you could have bought it down here at the October lows for 362. You got 10% of freaking freight line. But I'm not going to put those in. They're boring. Let's look at the S&P 100. Lockheed Martin. Citi. General Dynamics. AIG. GE. I might as well put in FDX. And Morgan Stanley I already have. We got a lot of scans that are showing up, so it just, I mean, just the strength of the market. We could use a good pullback. Not sure where we're going to get with it, but yeah. QQQ. HPK. Let's look at HPK for you, Nevin. HPK. I mean, the algorithm has you out. Algorithm loses you 28%. Buying and holding has gained you 15%. So we look at the long term on this, and it's been a slide down. I mean, it's just, look at that. There's no reason to expect this one. I mean, let's look at HPK here. Making 171 million. The PE's kind of high, not crazy high. Dividend 0.64. You're down 31% year to date. Target price is 23. You're trading at 15. But that target price is all the way back to 2021. So, I mean, here, April, Truist says it's worth $10, and you're trading at 15. Yeah. I mean, let's look at the insiders real quick. I mean, the insiders are buying at 22. I mean, they're buying big at 16. This was the biggest buys right here in July when it was trading at $10. So you had that buy right there by the president of $200,000 now. I mean, it's like you going to the quick trip to buy a Coke. I mean, the CEO bought $4 million at 16. Again, look at this. This dude bought $68 million at dollars worth at $10.50. Now, I think they're managing it to probably be at least the low. I would say that the support is probably at about 14 there. But I wouldn't. There are too many other places to put your money that's doing well to bet on something like this big. If you want to trade this one, I can't say that it's not a bad trade. But oil and energy right now, for me in particular, it's, like Devon. We'll put Devon. I've got a good amount in Devon. And it's just continued down. It's just continued to hurt me to hold this one versus having it in something like Apple or Amazon or something like that that's taken off. Even Cleveland Cliffs. I mean, Cleveland Cliffs got another buy-in here at 1826. Why didn't that show up on our my scans? I should put that in. Why didn't that show up on my scans? Hold on. Okay, let's go to the core investments. No, it didn't show up. Oh, it was because it was yesterday. It was Friday afternoon. So the MACD actually crossed up. Yeah. But let's just go down. I'm just going to go down and see where these mofos are at. Disney, you're still in. Devon, you're still in. FBCG, you're still in. Google, you're out. I mean, Google at 130 again. Goldman Sachs. Coke is a $60 stock. You're at 58. I mean, it's still running. Eli Lilly, you're out. I think this one probably 558. It's buying at 600 was crazy, but it's what I did in the even weighted core portfolio. Meta, you're out. MPLX, you're out. You're in, still in. Microsoft, you're going to be out. Netflix, you're going to be out. NVIDIA, you're out. With a nice 11% gain. Oxy. And I talked about SMCI. You're out. Nice little gain there, but you're out. Santa Claus Rally. I mean, here, if you want to, Investopedia. Let's see if they have Santa Claus Rally. The Santa Claus Rally. Two thoughts. The first suggests Santa Claus Rally occurs in the week leading up to and ending with December 24th and Christmas Eve. The other scenario suggests Santa Claus Rally occurs in the week following Christmas up to and including the first 2 trading days of the new year. So, I mean, that's just, traders just use that because essentially what happens is everybody takes off that week between Christmas and New Year's, and so volumes are down. But if you have a ton of people looking to buy and stuff, then, the Santa Claus Rally happens. Okay, let me hold on one second. Yeah, by the way, my favorite douchebag on CNBC. Remember, he told you to get the hell out of Bitcoin. He said Bitcoin is for suckers. And I think that was at 18,000. And ever since then, it's run. But again, don't listen to a douche on the internet. And just full disclosure, I am that douche on the internet. I had a nice discussion with somebody on Instagram on Friday who found me, I think on Friday morning. Found the podcast Friday morning. So, okay. I'm going to start the podcast. So, let me take a sip of water before I do. Okay. Here we go. I'm going to start the podcast. Wah, wah, wah. Good morning. It's Monday, December 4th. You've got 80% energy, Gary. 80% energy, Gary, because I still don't have a lot of energy, but I sound better. I'm going to go out for a walk. It was a rainy weekend. Good football games this weekend. The Giants were on a bye. The Giants play Monday night next week. I think they play Green Bay. So I might actually go to the game. I was looking on Ticketmaster. It's like $35 for a ticket. So I might actually go up to the Meadowlands for that one. But let's talk about the S&P. It is 4.2% away from all-time highs. The previous 14 times it went at least a full year without a new high, then finally made one. A year later, the S&P was up 13 times, nearly 15% on average. So I'll include that chart in the newsletter. If you're not subscribed to the newsletter, I suggest you subscribe to the newsletter. There's a couple of things. Anything that you're going to hear link-wise, the link is down below, link linktr.ee/daily stock pick. You'll see it on the video. This is where you're going to go. The newsletter is right here. It's on Substack, dailystockpick.substack.com. It's free. During the week, it's absolutely 100% free. It shows up in your email box around 12 o'clock, maybe 1 o'clock, depending on when Substack wants to send it out. But I write it right after this, so it does match the podcast. So if you can't listen to the podcast, the newsletter is a perfect accompaniment to it because you can just scan it and see what you missed. But I'll include a chart that shows you the previous times that the S&P was up like this, and it'll include also a chart from Tom Lee. And Fundstrat said, here's a note. As we look towards markets into year end, we see a zigzag, but ultimately a rally towards S&P 4750 to 4800. We are dip buyers in December along the zip tag. So remember, SPY trades at 1/10. So you basically, when he says 4,750 to 4,800, he's talking about 475 to 480. That brings us way up. I mean, let's just look at a weekly, because there you have, this is 44 to 55, and I said that's kind of the support and the resistance line. If we get above that, this is the 480 mark, and we're not too far away from that one. If he's buying the dip on this one, then today where you're at 455, you're down 0.73%. You're just below this yellow line. Like I said, it's going to provide some resistance there. But if they're buying the dip and you're buying long-term, buy the dip. I'll include that in the newsletter so you can see that chart. The other thing that I'll include in the newsletter is this. This is, if you don't have Webull, you're out of your mind. Go to the link tree right now. If you don't have Webull, go to the link tree and click this third link. Join Webull and get 20 free stocks. You'll get free stocks. But Webull is an absolute, or I should come back to this. Well, we'll come back to the link tree, but the third thing. But what you can see on the screen right now, the economic calendar, this is an email that I get every Monday from Webull. And it includes Broadcom Thursday. It includes Lulu earnings on Thursday and AZO on Tuesday. Those are the three things. It gives you everything that you need to lay out your week. And again, this link tree right down here on the third link. Join Webull. I put $1,000 in there in January, and I am up to, let's do live check on Webull. I am up to, we got to get out of that one. I think it's $3,030. $3,030. Large majorities Apple. I wrote in the weekend newsletter about how I've traded stocks in Webull rather than betting on football. I've done significantly better because year after year betting on football, I wound up losing money. It was never big money, but I'd put $250 in. I'd get a $250 match. And by the end of the year, I was at zero. So I also get Seeking Alpha. If you don't have Seeking Alpha, I would use the link on Linktree and go and sign up for a free one. You don't have to pay for a large part of it. I get the paid one, which means I get an email based on the core portfolio. The core portfolio, you get a health score, 3.69. I use this. I am planning on doing a video about all of the things that I use in Seeking Alpha. I don't know that I've done a great job in doing it. I've gotten some really good feedback from people that have signed up for Seeking Alpha, the premium version, and they really like it. The core portfolio one, I actually like. This weekend as well, I was looking at the top ETFs and I was trying to groom, okay, which ones do I think are actually really good for the new year? So I'll have a list out. Keep an eye out for it, but Seeking Alpha, I love that email. So I'll include that in the newsletter as well. The other thing in the newsletter that you're going to see is with less than 1 month to go, I have a list of the top performing stocks in 2023 with the largest market caps. And so it includes Apple up 47%, Microsoft up 56%, Google up 49%, Amazon up 75%, NVIDIA up 220%, Facebook up 169%, Berkshire is up 15%. It's just doing great. And it's got every large cap stock. Nike is down 3%. T-Mobile is up 8%. Pinduoduo up 78%. It's not one of the largest stocks, but it's in this list. So I've got that list. The other list that I'm going to include is the S&P sector list year to date. Number one performers year to date, technology, XLK 46.4, communication services up 41.5, consumer cyclical up 28. The ones that I wanted to focus on are the ones that I think have opportunity, and it's energy up 2% year to date, and it's utilities that are down 9.3%. And if we go and look at we look at those two, so XLU, we had a cross up on XLU. XLU. So we had a cross up on XLU, which indicates that we have a little bit more of a bullish run. I don't know that I'd necessarily trust it, but you are holding this 200-day. And if we look at a long term, and you're a big believer in XLU, I drew this range right here a while ago. Probably, let's see. It goes all the way back. And yeah, well, I can't move the chart right now, but you can see we're in the bottom. And I think if you look at the death cross right there, it might continue to point down, but utilities were basically down because bond rates were so high. And utilities are used by Walter, the guy who sits in his chair, talks about the good times with a blanket draped over him. And that's the dude who invests in utilities. So XLU might be an opportunity. Great list. There was a tweet that I saw, and if you're not following me on Twitter, you can follow me on Twitter. I actually post a lot of pretty good stuff on Twitter. Like Palantir stuff, and here's a douche on the internet who tells you to buy a $100,000 car instead of your $30,000 car because his appreciated, blah, 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 whatever. There's a lot of good stuff in my Twitter feed, so you probably should follow me on Twitter. But I did find a great tweet, AI, the thematic stocks of what to really invest in. And like AI, Microsoft, Snowflake, MongoDB, Palantir, ISRG, Intuitive Surgical, cybersecurity, CrowdStrike, Zscaler, PanW, Net, for SaaS services, CRM, Datadog, ServiceNow, Axon, Team, CLFT, IoT for Internet of Things, AdTech, Meta, Trading Desk, and Google. So there's about 7 or 8 different sectors, and I posted the top ones in there. There's a great list by this particular person. His name is Brian Stoffel, and this list. I'll include this link so that you can read it. He's got 19 stocks in his portfolio, and he does just a fantastic job with absolute just precision why he owns them, where he finds them attractive, and where he's currently holding. And what his prediction is for each of these 19. This is what you want to look for. Don't look for a dude who's saying, hey, I think this one could pop 30%. You look for dudes like this, like Brian Stoffel, who puts in the research, who does this kind of thing and says, hey, it's a great one. Josh Brown, the Reformed Broker, is done, but he does have a newsletter. The economy is like the human body, let it heal. I thought this newsletter was absolutely fantastic. So I'll include a link to that in the newsletter as well. I think you should probably subscribe to his newsletter. I like it. Also, I'll include a link. TrendSpider has a new indicator. It's a per session volume. So I've had hundreds of people sign up for TrendSpider through this podcast. So if you're listening, this is a great, I looked at it. I played with a little bit. I don't think I have it quite dialed in yet, but you do import it. And they go through in this blog exactly how it works, how to use it. I've got it on one of my other screens, my work areas on TrendSpider, so I'm still trying to lock it in. Let's talk about Alaska Airlines. Alaska Airlines is set to buy Hawaiian Airlines for $18 a share. And I want to point out Hawaiian Airlines is right now trading at $13.23 per share. That is up 173%. HA was trading for $4.85. This, again, they are going to be outside of this chart. We're going to need to pull this one down a little bit because it's going to be even above this. I mean, let's look at a long term of this one. And you can see $13 is right about where it topped out back here in July at the highs. And that's where it's trading at right now. But $18 is way up here at just above the 200-day. The reason it's not trading at $18, even though Alaska is going to pay $18 per share for Hawaiian Airlines, is because there's a concern that the Justice Department and the administration, or whoever does these airline things, I don't even know which part of the administration does it, but the administration has not been very friendly to purchases like this. So you could, it's kind of like, remember we talked about Activision Blizzard when it was in the 60s and 70s, but Microsoft was buying it at 95, and Warren Buffett said, yeah, I think it's worth the risk just to see if it goes through. And there were tons and tons of fluctuations in that between 75 and 90 and blah, blah, blah. Well, if you had the balls to stick it out and you held on to that, you wound up getting $95 per share. So it's kind of a good one because they do announce per share. It's different than the PXD purchase by Exxon, where you're getting like 2.33 of Exxon for the purchase. As Exxon goes down, PXD will go down. So it's just a bit of an arbitrage kind of thing. You can hold on to it if you want. I'm still holding. I like the dividend. I just don't think that, there's any risk of that one not going through. Now, 22 countries committed to triple nuclear energy capacity by 2050. This made all of these nuclear energy stocks just soar. You can look at if you want to start a list of nuclear energy stocks, you can absolutely start a list of so I'm going to include this article in the newsletter. So if you're interested in nuclear energy and looking at that stuff, I think it's a great opportunity to take a look at some of those stocks so you can track them. I didn't take a look at them. Uber is included in the S&P 500. We talked about this one. It was up 5%. It's up at 60. I would expect this to probably put in some type of top here at about $60 and pull back maybe a little bit. You're seeing back here where it was at 60 back in 2021, at March 2021, when it was at its all-time highs, I believe. Was it all-time highs? I don't know. Let's see. No more data. Yeah, that was pretty much all-time highs back here at 60. I would expect it to pull back a little bit here. I probably am going to trim some of my position, but any pullback, I'm going to be adding to this position. Look at how far it is above the 200-day. You just had the golden cross on the week. So Uber did get into the S&P 500. One that didn't get into the S&P 500, but it was a long shot, was Palantir. We're back under 20. It's down 2% in the pre-market. It's at 1972. So take a look at those two if you have them in your portfolio. Now, onto the social request. But, I did want to point out, Tesla got into the S&P December 21st, 2021. And so if we go back December 21st, 2021, I'm going to look at a weekly, and we'll go back to December 2021 for Tesla. Let's take a look. December 2021, I'm going to start it right about there. Okay, December 2021, in the lead up, it kind of got there and it got to its all-time high. You haven't really gotten to that. So it's a little iffy whether you will get Uber, even though it's included in the S&P 500, whether it will this will be the bump, the last bump that we have, or long-term if Uber continues to go up. There's a little bit of difference between Tesla and Uber. Tesla has had a bit of a problem with some of its cash flows with the margins declining, but Uber tends to have the margins increasing. So I don't want to say it's apples to apples. It's more like apples to maybe applesauce. It's a little bit different. So just be aware of that. I did want to bring that up because I did hear that. Now, Zach asked, Pfizer seems like an overreaction on Friday based on their crappy obesity pill, but it's been a solid company for a long time, and a 5.7% dividend is nice. Pfizer is one of those ones that I own, and I think I still own it. I didn't get out of it, and I should have at 40 and 50. That was my fault. Is I just didn't think that a solid company with good earnings and stuff like that would get wrapped up in this. The problem that they have is that they are wrapped up in COVID. And this is a COVID-defined stock. And I have a problem, the CEO in particular, who said that their vaccine cured the disease early on. And yes, I know science was still evolving and blah, blah, blah. But as more information comes out, he knew it didn't cure. He knew it was like the flu vaccine versus the smallpox vaccine and things of that sort. I just, I wonder what they're going to do, because I think they were pushing that weight loss drug, and they were pushing that, rather than a shot, this is a pill form and blah, blah, blah. And it just didn't work. So what else are they pumping up? And so that's what worries me about Pfizer. You're right. I mean, for a 5% dividend with the amount of drugs that they have in the arsenal, not a horrible thing. They're down 43%. The average target price is $39. UBS resumed coverage with a $34 price target. I just don't, the amount that it has to run and it has to overcome in order to run that much, I think there's better places in the market. And I think there's better drug companies in the market. And that's why I don't have Pfizer in the core portfolio. That's why I have Eli Lilly in the core portfolio. I think Lilly is doing it right with the drugs. I think they'll come out with a pill form of Ozempic or whatever, whichever one they have. I think they'll come out with a pill form of it. And I think they'll do better. So, Zach, I agree with you. I still hold Pfizer, and I probably should get rid of it. I trimmed a good amount of it, but I just think it's wrapped up in that COVID. For me, it's just kind of it's okay. Veritiv, VRT, has made 12% in 3 weeks. As the song says, should I stay or should I go? VRT. I mean, this is, if you've made 12% in a couple of weeks on this one, for me, my goal is always like 10%. And if I still have confirmation, I'm still holding. This particular one, you still have confirmation over the 9-day. In pre-market, you're down 4.81. VRT, I know nothing about this company, so let's take a look at it on FinViz. Market cap, $17 billion. They're making $254 million. PE is rather expensive, 69. It is an electrical equipment and parts company. It is up 230% year to date. It is at 1% below its 52-week high, which I believe would be an all-time high. We can take a look at a weekly. So, I mean, it's expensive. I don't know that I'd necessarily wait for the hammer to fall on this one, but everything that points is pointing up. So your RSI is at 73. At some point in time, it doesn't mean now. It doesn't mean anytime soon. But if they don't continue to grow, it's going to fall. Let's take a look. Yeah, most recent is sale, but that was September at 37. I mean, shit, this one's at 45, and these guys are selling at 37, and they're selling big. This direct, they sold 10 million shares for $375 million. This dude at 34 in August, director, VPE Holdings, these guys have sold 30 million shares. Philip O'Darity sold a bunch at 24. For me, I don't look a gift horse in the mouth. Make sure that you're just watching that chart. Schmagoogle. You think it's any chance of XOM bounce to 105 this week? XOM is Exxon. And if you've been watching Exxon, we'll go over here to Exxon. Because remember, there were huge insider buys on Exxon for a while. We've had huge insider sales, $216 million. This guy, Jeffrey Urban, was buying this up at 106, 106, 105. He just sold $216 million worth at 104. So I don't think he's taking a loss. I think these are long-term gains that he's looking. Hasn't told anybody why he sold, but huge insider selling. Now, the average target price on this is still 128, and it's recent. I mean, it's all 223, 2023, that price. You're down 6%. It's got a 3.6% dividend, a 10 PE on forward as well. As long as oil continues to stay down, Exxon will go down. Exxon is down 1% at 101. I think 100 is where it wants to stay. I personally, if you're trading this one, I wouldn't trade this one. You have no confirmation. It's below the 9-day. I think there's better places to trade in the market. If you're sitting there wanting to hit 105 on Exxon, there's got to be some reason. And for me right now, with the supply that we're putting out here in America, with the supply cuts that Saudis and OPEC are trying to do to drive the price up, with demand in China going down, there's better places in the market. Again, better places in the market. The next social request, DPST. That may be one of the better places in the market. Morris, DPST up big on Friday. Am I chasing? It's got a big gap to fill. Yeah, we've got a gap to fill, a gap up here to about 78. If you look at DPST, and I want to point this out, this is a triple levered ETF on the regional banks. And regional banks took this hit back in March, and you saw it go from 266 down here to 42. Then they had a reverse split. And the reverse split was because this was at like $4, $1, and it has to remain above $1 to remain listed. So these triple levered ETFs, which are decaying assets, these are not investments. These are trading tools. These basically lose value because they play options. So when you invest in them, you're investing in a trade. Are you chasing? Absolutely, you're chasing, because just a little bit ago, at the end of October, we were down here at 40. This is a 94% gain to get to where you are today. 94%. Now, I put this yellow line that you see right here in a while ago. I said that's where the trend is going from March of last year, where it just kind of I needed 3 points for a trend line to be true. You need at least 3 points. The more, the merrier, and the better. But you see, we had 3 points on the upside there, and this was where the downside goes. So I said, if you're looking at the trend, that's where you have to go. The problem is your 50-day is still moving negative. Your 200-day is still moving negative. Your RSI is in no man's land at 50. If we look at the algorithm on this one and we see, okay, how do we do on the algorithm? The algorithm loses you 66% on this, whereas if you bought and held 2 years ago, you'd lose 84%. If we go to the 65-minute algorithm on this, which just uses an 8-day EMA, you make 10% on this, and you get in and out, let's see, positions 92. So over 8 months, you had 92 positions. 33% are winners, but you make 10% versus just buying and holding. You make 5%. You can see right here. Let's see, are we in or are we out? Let me pull all of these, remove all annotations. We're going to pull those out. You're in. I mean, you were in here at 63. So it got you in last week on, looks like December 1st. So Thursday, maybe. December 1st, it got you in at 63, 65. So this is during regular hours. It was now. You still have confirmation. Are you chasing it? Absolutely. Absolutely, you're chasing it. But sometimes it makes sense to chase. I don't know that I'd necessarily chase this one. The RSI in the 65-minute, it's at 76. Your MACD is crossing up. It's kind of a little high. It's probably got to come over. So I don't know that I'd necessarily chase this one. For me, again, I'm patient. This market is kind of nuts, and you're seeing a pullback. Where would I rather go? Well, Meta is pulling back to 316. This is down 3%. The algorithm, the 4-hour algorithm has you out after a 6% gain. But I'd say if you get to 311 today, pull that trigger. You're at the 200-day. I'd pull the trigger on that one. Google, you're almost under $130. I don't think Google has anything to fear about. So long term, I'd rather have my money in that stuff and wait for DPST to actually give me a sign that you can go. One note, if you guys have been listening for a long time, I did a FIRE podcast, FIRE with Gary, and I put that in the newsletter. But one of the biggest things that I've said, FIRE is really easy. And FIRE is financial independence, retire early. It's what I did. I followed it unknowingly. I followed it. And there's basically anybody that teaches you FIRE, there's nothing to teach you. It's very simple. It's income and expenses. You have to maximize your income while minimizing your expenses. And the investment part of this is making sure that your money's working for you. And it's not working against you. So it's very simple. But one of the things that I said was, hey, mint.com is the way I track all of my expenses and my net worth and everything. I've been using Mint for years. Well, Intuit announced that it's going away. So I've been starting to use Empower, and I'll have a link for you. But Empower is the closest one that I've found. It's not as good as Mint in my mind, but it's not as bad as the other ones. It's free. And that was my number one thing, is that it's free. So I really, really think that if anybody followed my Fire podcast and wants this, I'll include a link so that you can get Empower. Empower is a solid tool. I really, really like it. So use that one. And now let's look at some scans. One that I found that crossed up on Friday, Cleveland Cliffs. It is said that Cleveland Cliffs is probably in the one that will get U.S. Steel. And so this is, the union wants Cleveland Cliffs to get U.S. Steel. This will greatly benefit Cleveland Cliffs. Plus, Cleveland Cliffs increased the price of their product. And they've gone through like 3 or 4 price hikes, not seeing a decline in any of their demand. So again, they're just a company that raises prices, that is able to consolidate and bring on more capacity. That's a company you want to invest in. I think this is a $30 stock. I'm in at about, I think, 16, somewhere in that neighborhood, all in. So Goldman Sachs, GS, this is in the core portfolio as well. This is one that the RSI is a little bit high if you're looking short term, but we just crossed the 200-day. I don't think you have anything to worry about buying Goldman Sachs. It's another leg up. I'm not in Goldman Sachs. I have Morgan Stanley. I have Bank of America. I have Wells Fargo. And I have Citibank, I believe. I have several others. But Morgan Stanley or Goldman Sachs, I put in the core portfolio. It's a solid winner. And I've said $300. Anytime it approaches that $300, I think you should get in there. If you really want to know Goldman Sachs, the book value here from FinViz is $313. It's $313. So $348 is the price right now. It's a little bit extended, but I like it. Another one from the core portfolio that gets you in is Roblox. This one has just been on a legendary run here from 27. So the algorithm got you in September 27th at 27. You've had a couple of opportunities to trade around 30 here. Now you've had a couple of opportunities to trade around 40 here. Remember, those handles are super strong. As far as the volume goes, I think you have some pretty good volume shelves here. If we pull this back to some highs and we see where are people holding, they're holding up here. Your stop loss should be at 37 because you really don't have any volume between 30, 32, and 37. But anything under 40, I think you could take that one for a little bit of a ride. Morgan Stanley, this is one that I personally own, and it's just coming up on its 200-day. So you got here at 70. I think it's a $90 stock. I think it's a good one. Some of the energy names, ARLP. Boyle, interestingly enough, got a cross up. And I'll include all of these in the newsletter too, by the way. But Boyle got a cross up here at 36.60. Is it time for natural gas to get a bump? You're down 6%. I included an article last week about how natural gas, we're pumping out more natural gas here in the U.S. and we're able to ship it across. And there's not much need for natural gas, so the supply is really outweighing the demand. So Boyle, a little bit of a hard one there. Halliburton, this is a solid energy name. If you wanted to get into energy services, this one at 37, I don't think that's a bad price. You're under the 200-day. Your 50 days kind of taking a little bounce. If energy is going to continue to move up, Halliburton will continue to move as well. You're just getting to your ex-dividend date. SCO. Oil. SCO is the levered ETF against crude oil. It is triple levered. So it is one of these that's a decaying asset. You don't want to stay in it. 1964. Is the cross up here. And we just got out. Nice 13% gain there. You bought in October 26th and you got out November 22nd. So 1 month, solid move. You're above the 200-day. Typically on these stocks, you don't want to be above the 200-day, but that golden cross is happening where the 50 days crossing up. So we got that one. Albemarle ALB, one of the levered ETFs, UMDD. UMDD is the Ultra Pro Mid Cap. So this is the bull of the Ultra Pro Mid Cap. Now you've been in this since October 31st at $14. It's at $19. It held above the 200-day. Your 50 days moving positive. There have been talks about mid caps and small caps being the ones that will make the next big move. So solid move on UMDD. Some of the ETFs that got the sectors, XLF. XLF has been in a legendary move. You're up here at 32 down October 31st. You're at 36.25 right now. And it's positive for, it just moved positive. So XLF is one, XLP, XLU, XLI. We went over all that. Citibank, General Dynamics, AIG, GE, FDX. So there's your scans. I'm going to get out of here. Before I go, just remember there is still a Seeking Alpha sale. You can get it for $50 off. If you want TrendSpider, you can get TrendSpider right here. Go to Linktree, linktr.ee/daily stock pick. And you can just click on that link, sign up for TrendSpider. It is under $400 still. If you use that link and you go up here to the top and you go view plans and pricing, you can see the middle one, Elite. This is the level that you want for my algorithms. It's $397 for the year if you prepay. If you want a 7-day free trial, that $300 and under $400 goes to $780. It's a significant if you want the trial. If you want to do just monthly, it's $70 a month, $79 a month, but you do get a 7-day free trial. So the yearly prepay is absolutely the 100%, the best one to go in. You still got 15 hours on that one. That again is that first link of on TrendSpider. If you want Seeking Alpha, it's the second link. I use Seeking Alpha every day. I absolutely love Seeking Alpha. I think the premium is absolutely worth it. I think it's $170, $180, somewhere in that neighborhood. But you do save $50 if you use this link. Webull, like I said in the beginning, if you're not trading on Webull, the app is phenomenal. I use it as a sporting bet. TQQQ, SQQQ, all of those little triple levered ETFs that I include in the TrendSpider list. So when you sign up for TrendSpider, you get all of these lists. It's core investments, covered call ETFs, energy names, the levered ETFs. That's the one that I use. All of these, it's DRV, DRN, TQQQ, UPRO. All of these you can scan on and use if you'd like to sign up for TrendSpider. Then you got the Daily Stock Pick newsletter. This is free every day. Like I said, you'll get all the lists that I just went over in this podcast. If you are paying anything more than $25 a month for your phone service, click on that link. You will save $20. So your first month service is as low as $5. I have the $25 a month service. It is deprioritized data. I don't even notice that it's deprioritized data, but if you don't want that, just go and pay $35 a month. I know tons of people who are paying more than $35 a month. There's no reason for it. And again, that's part of my Fire podcast. If you're going to order a Tesla, order it here. If you're going to, look at AT&T Fiber for your house, look at it here. Savvy Trader, I'm not really promoting that. I'm not sure where they're going in a couple of weeks, but if you want to follow my trades on there, you can do it. YouTube Live. If you make money, I don't charge you guys for stuff. I do make money off the affiliate links, but if you want to just pay me because you made some money and you want to say thank you, it is the season of giving. Venmo, PayPal, and Cash App right here. And again, if you want to buy Webull down there. If you don't have one of these things, sign up for Venmo right down there. Just use that link and sign up for Venmo. If you want to get to any of the social platforms, they are all up here. If you want to get my algorithm, remember when you sign up for TrendSpider, what you have to do is sign up first. Then you go to this little mail thing and you email me. I will mail you back everything that you need. It's basically an import process. So any questions that you have, you can email me, hit me up on the socials. The Facebook group, it is private. So, you can ask me for any of the stuff that you want in there. Okay. I will see you guys tomorrow. See you. Bye. I know you said oil is down. HPK. We looked at HPK. Yeah. Travis, hopefully I answered you about the Santa Claus rally. How do you get your algorithm after we signed up for your newsletter and got TrendSpider? Eli, you basically just email me. It's dailystockpick3@gmail.com. And just email me. And if you signed up during the time when the newsletter, when I was giving away the newsletter, I'll just look at the date that you signed up. And you know, if you email me today, Eli, just make mention you'd said it on YouTube Live, and I'll hook you up. Don't worry. Hey, Lucas, I'm not a legend. I'm just Gary. Okay, let me see. How do we open up? I think we opened up pretty well. Let's see. I saw some stuff up. QQQ is down 1.23%. Everything's coming back down. I mean, look, like I said, if Amazon held 146, we were okay. It didn't hold 146. But we've lost it, so I got to trim Amazon. It is daily stock pick. Go to Linktree. It's daily stock. And Lucas, I think you emailed me, and I emailed you back from the newsletter. If you reply to the newsletter, I get it. So if you get the newsletter and you just hit reply, I think that's how you can get me. I'm not saying I'm always going to reply, because I do get a bunch of junk. But if you hit me up on the socials, I'm typically replying. Okay. Now I've got to go because I got to choose my health care for the next year. What a nightmare that is. But Lucas, it's right here on the link tree. I'm not going to click it because it's going to open up Apple freaking mail. It's the only thing I don't like about this. Okay. I will talk to you guys tomorrow. See you. Bye.